Here with our trades is Eva Ados. She's Chief Operations Officer at Eshares. Eva, what do you do with Tyson? It's been a tough one lately.
I would say a strong sell. And the reason is this is a publicly traded family business, but it has been run by the family that owns 22% of the company as a private company. The reason I say that is that there have been behaviors that would not be tolerated in other publicly listed companies. And we have also seen excessive chairman compensation, which is not aligned with how the stock has performed. By way of comparison, if you look at Kellogg's, for example, the same person is receiving a fraction of what Tyson is paying. So there is a misalignment there. I've also noticed that in the last 1 year, the gross margin has dropped by 50% actually. The EBIT has dropped by 2/3, and the revenue and the profits have gone from 4 billion to 900 million. So the fundamentals do not look good. This is a company actually that has been set by bad family culture, bad corporate culture, bad corporate values, and I do not see that changing anytime soon. I think once the culture has changed, it's really hard to get it back to where it was before, and I do not think that it's being run in a good way, and the fundamentals are aligned with the way the company is managed. I do not think that's going to change. It's a sell.
That is a fairly strong indictment of Tyson's. Let's stick with food, shall we, and move forward to Campbell Soup, which has acquired Rao's owner, Sovos Brands, for $2.33 billion. That's a lot of sauce. Sovos up 25%. Campbell's down 1%. What's your take on Campbell's here? We all like the Rao's sauce, Eva. What do you think of this trade, however?
I do like the sauce too, but I have it as a sell again. Although this time it's different. The story is different. It's again a family-owned business, and the family owns 33% of the company. But in this case, they've hired external professionals to manage the company. And we've seen again a bad culture as a result of this. The gross margin has dropped from 52% to 30%, and the EBIT has gone from 27% to 17%. And so in the last 25 years, the revenues have slightly increased, but the profits are way off where they were 25 years ago. So I've seen the culture change, and again, there's consistency here. The culture has changed. I'm not optimistic that it's going to get back to where it was 25 years ago. It's a sell.
Wow, all right, Eva. We got a quick programming note. We should point out that Campbell's CEO, Mark Klaus, will join Mad Money today with Jim Cramer. That's at 6 p.m. Eastern Time. He'll talk about the deal for Rao's sauce, so make sure you watch that one.
And shares of dialysis firm DaVita are up about 3% after UBS upgraded the stock to a buy. What's the story here, Eva? What would you do with this stock?
That's a hold. On the one hand, I like the fact that their valuation is consistent with their peers, and also there is the expectation that there is pent-up demand due to COVID. Now, on the other hand, again, in the last 4 years, we've seen flat revenues, and in the last 2 years, we've seen that the profits have actually dropped quite a bit. So that's when the stock was at their all-time high. And when the profits are up 40%, and now the stock is up 55% for the year, approaching its all-time high from 2 years back, with the profits far off, I do not see, I cannot justify a buy here. So if you own the stock, you can hold it. If you do not own the stock, I wouldn't rush to buy it.
All right, Eva, thank you very much. I appreciate it. Very strong opinions, Eva. Thank you so much.